thank you very much for joining us here on what promises to be another engaging and insightful conversation that we intend to have this morning on the road ahead for financial inclusion in India. Using 2021 as the base year, the RBI Financial Inclusion Index says that India's overall score has improved from 53.9 in 2021 to 56.4 in 2022. Now, what is the roadmap that the RBI has laid out for financial inclusion as part of the National Strategy for Financial Inclusion, which really runs till 2024, so we've got another 12 months to go. It talks about providing banking access to every village within 5 kilometers of radius. That milestone has been achieved fully in 26 states and 7 union territories. That is as of the 31st of March 2023. There are other parameters that the RBI has listed out in terms of how to improve our financial inclusion score, as well as how to improve outreach to the underserved and the unbanked. To talk more about the road ahead, we've got here with us the chairman of the SBI, Mr. Khara, Sanjeev Bajaj, and Hitendra Dave, representing the foreign and private sector banks. Gentlemen, appreciate you joining us here. Mr. Khara, let me start by talking to you. As I pointed out at the start, significant progress has already been made as far as financial inclusion is concerned across a whole host of metrics and a whole host of parameters. But if I were to ask you about the road ahead and specifically talk about the progress that we've seen as far as the PMJDY accounts are concerned, total accounts that we've opened are about 49.42 crore as of today. Of this, rural semi-urban account for about 33 crore, urban about 17 odd crores today. But the challenge is not that we have opened these accounts, but a lot of these accounts are low balance accounts. A lot of these accounts are dormant accounts as well. How do you see the progress on this front, and what do you believe the road ahead needs to be?
Well, very well said. This initiative got started in the year 2014. And from there we have come to a stage where today we have got more than 49 crore such accounts. As I mentioned in my address also, almost 1/3 of the population is covered. So normally if we take a family size of 3, so all the families are covered. But this is merely a statistics. The very purpose of these accounts was, one of course, is to ensure that the payment system should be frictionless. That I think it has really helped us in achieving. The second was channelization of the financial savings. That also, if we really look at it, these 49 crore accounts have got almost about 2 trillion balance in these accounts. So, on an average, about 3,000, little more than 3,000 rupees is the average balance in these accounts. I think the balance in these accounts will be a function of as the per capita income grows. On that particular piece, one of the, apart from ensuring that the accounts should have balance, it has been ensured that these accounts should also have other financial services made available. Right. That is the life insurance and the personal accident insurance, and also the annuity, which is APY. So this is something which has already been incorporated. Now the next piece is that their ability to raise credit. And for making credit available for these accounts, very important component is the lender's confidence in their ability to repay. With the help of analytics, perhaps we can create models. With the help of surrogates, we can figure out their repayment habits. And that is something which is going to be the next initiative, next big initiative. Already some small amount, 5,000 rupees or so, that kind of a credit is, these accounts are getting linked for the credit linkage also. But eventually, in order to really encourage each one of the account holder to engage into economic activity and get supported for that economic activity, perhaps the surrogates which will be available will be a big help to build up the confidence in the lending institutions.
How confident do you feel about being able to do that today?
I'm quite confident, actually. That's why I'm saying all this. And we have already started seeing the early results of that, and which is helping us. So what we are doing is that we are ensuring that now it should be end-to-end digital. contactless lending platforms which have been created, they have been created with that in mind. So that right from filing an application till the disbursement of the loan, it's without any human intervention. We are creating models with the help of analytics, and those models are getting incorporated into the loan management systems. So this is something which will be a game changer in terms of enabling these account holders also to borrow and invest into economic activity, and I'm sure it will bring in a whole lot of prosperity right down up to the last mile.
You said that this has the potential of being a game changer and that the initial results are positive. Can you share with us what the initial results indicate at this point in time?
No, as I mentioned about the contactless lending platform, making it possible for such borrowers to apply, and because, see, Equifax and these kind of rating agencies have come into existence. They're also riding on this data. So, if you really look at it, retail credit has become very popular in last 10 years. Prior to that, retail credit was not as strong in the system. Why? Because there was no rating agencies. We were not in a position to get the individual scores. Ever since the individual scores have been made available, banks are falling on each other to lend in the retail sector. So the issue which I am trying to highlight is that it is a credible availability of the credible information about the ability of a borrower to repay.
Right.
That is something which enhances the confidence of the lending institution. So it is not merely bank, it will also be the MFI, it will also be the NBFCs.
Yeah.
So the whole system will get benefited with the help of this ecosystem which is getting created. So I think, to my mind, this is something which is very positive. That's why I feel that if at all we succeed in creating these credible information database, it is certainly going to improve the climate.
Absolutely, it will certainly improve the cause of financial inclusion. Sanjeev Bajaj, let me take that point forward with you. One, of course, is the access to information, access to data, which will give banks, NBFCs, MFIs the confidence to go out there and lend, because you have some clarity and some line of sight on the ability to repay. But I want to understand from you, in your own experience at this point in time, on being able to bridge this credit gap, what has worked? What hasn't worked? And more importantly, if you were to talk about the road ahead, what do you believe needs to be prioritized?
Shereen, you've got between two formal bankers and informal one. So let me actually swing the issue around and let's look at it from the point of the individual. What are the three areas that an individual needs support? One we've talked about is access. As far as access is concerned, we have a large working digital public infrastructure now for payments, for so many other financial products. How can we get the government, private sector and the public sector to work together towards at least a certain minimum set of services for much greater penetration, so we get that access? Second is affordability. I mean, the access is great, but if I can't pay for most things, what is the point? Here again, what protocols like UPI have done is completely changed the payment game. How can we again bring that more and more to a basic level of services at least? Eventually the rest, as private sector, even public sector, we have to make money. But how can we make sure that a certain set of minimum services are affordable? And the third, as an individual, I would say, is ascend. I don't want to be in that financially included category at the lowest economic level of society for the rest of my life. So as an economy, if you're going to grow at 7-8%, every few years, I'm going to be a little better off as well. How can the right savings tools be created so that at least my children are out of it?
No, you're absolutely right, and I think that links back to what Mr. Khara said as well, in terms of the inflection point as well, the game-changing moment and opportunity that he spoke of. But again, I want to understand from you, in your own experience of being able to provide these services, in your experience of being able to get people to move up from where they are and aspire for more, what has worked, at the back end as well as at the front end?
The enabling technology has worked. I think what we have seen across our regulators has been an openness to experiment with fintech, to experiment with innovation, and that is allowing many of us to move ahead, get into smaller towns, villages, use the digital infrastructure where the economics work, physical infrastructure doesn't. but yet we are still very much caught up. For example, why should we in banking have physical branches if we can deliver the same product and service through a digital medium? We need to review some of our traditional structures, whether in banking, whether in insurance. We're seeing actually a lot more happening in insurance over there towards the development role. Same thing has to happen in banking as well. And of course, in a world which is today more and more rich in data, you are able to control if something goes out of hand. But we have to open up, and I think we are taking the right steps there, but a lot more needs to be done. We need a lot more competition in banking and financial services. The insurance regulator is talking about hundreds of companies in the insurance space. Now, you have to have the right amount of capital, you have to have the right amount of security over there. Otherwise, banking today is low-hanging fruit. Why should we, as an NBFC, go beyond 200 cities? We can make enough money there. We go there because we feel this is our responsibility towards India. Open it up to many more. That's how you will see this happen.
So the banking aspiration from what you're telling me, that still is housed somewhere at this point in time in your mind?
So who knows? But you know what we've managed to do without a bank gives us the best of both worlds. So the traditional banking license may not be the only way, and that's not what I'm necessarily referring to. I'm just saying, if you forget what the Banking Act, but if you want to take banking to the people, how do you do that?
No, and that's a good point, and Hitendra, let me get you to come in on that as well. And, you know, to Sanjeev's point that we need not necessarily look at banks from the traditional lens. And the RBI, the regulator, has moved and opened up a plethora of different kinds of banking licenses, which have found some takers in some cases and some categories. How effective do you believe that has been so far? And what, more importantly, do you anticipate the role of these different kinds of banks, so to speak, to play from payments to others?
I think it's too early to make a judgment call whether payments bank is a sustainable business or not, or small finance banks are not, because, you know, and you can see why RBI is being cautious. I mean, I appreciate Mr. Bajaj's comments, but you know, the experience of the regulator and of the banking system has been a little mixed, right? I mean, if you see last 25 years, there have been 4 or 5 spectacularly great banks created, and there were 4 or 5 not so great stories as well. So I think you can understand why they have concern, and as with every policy, the good ones get affected more than the not so good ones. But to your broader point and to the point on financial inclusion, I think our sense, as this is HSBC's global research thinking also, is that one of the greatest business opportunities around the world is financial inclusion, and within that, India is one of the greatest prospects. So I think one thing is, it's a good thing to do, it's a, you know, the nice to do part, but if we can convert that nice to do part into an extremely profitable business, because we do know that there are whatever 25 crore to 50 crore Indians who even today, either for basic banking services, when they save money, they don't go to the bank, they go to somebody else, privately place the money or buy gold or put it in their mattress or something, or certainly don't have access to what Mr. Khara mentioned, maybe minimum banking services, but how do you convert it into health insurance, life insurance, and so on and so forth. So I think the trick here is, and I agree with Mr. Bajaj here, digitization has in India opened up the prospect that you do business with people who are so far new to credit, new to finance, new to insurance, new to everything, new to credit card, and not just do it because it's a socially nice thing to do or a priority sector kind of thing to do, but do it because you are taking that particular person away from a very high cost access to finance, if at all, and that too informal, into a much more sensible cost one. So the prospects for this are very bright. I think that digitization enables it, but you know, we will still, I think it's a, you know, since the session is from here to where, I think it's still, we are 5 to 10 years away from the point where we
5 to 10 years away still.
Yeah, I think so, 5 to 10 years away, where you could say, listen, the definition of financial inclusion, and we don't have a proper definition. If you see the task force that Mr. Khara chairs, one of the things is define financial inclusion. So I think in the definition that we have veered towards, I think we are a decade away or so.
बिजनेस लोन्स बोले तो सिर्फ लेंडिंग कार्ड
और वीक बोले तो